Yo, ladies and gentlemen, welcome back. Happy Friday. Happy end of your trading week. Man, it was a crazy one, right? Wednesday, we had power. We had the Evergrande situation out of China. We had China banning cryptocurrency or making it illegal for trading. I mean, there's a lot of things going on. So even to the debt ceiling, right? It's quite a lot of things at the moment. So it's a well-deserved weekend. Okay, please relax, enjoy it with your friends and family. Take a step back from the markets. The markets will be here on Monday, and so will we, to tackle it all over again. But before we dive into this video, I want to give a big thanks to every single one of you who have subscribed. You know, this has been a pretty good journey. I love it. I love doing these videos for everybody. I love doing these videos because mainly is a journal for me too, right? It reminds me of the things that I want to do. It reminds me of what I'm saying, what I'm thinking, my perspectives. And in return, it also, I hope, and it's my hope that it helps you. Okay, if you have any questions, please leave your comments down in the comment section. I'll be happy to interact with you. Alternatively, if you want my full attention, also join Trending Waves, guys. Join Trending Waves. It's totally free. Come on into the Discord group. It's free for a period of time. Take a look at what we do in there. Take a look how we analyze the markets. Take a look at how we talk, interact with one another. It's a very fast growing community, and I want you to be part of it. Okay, the link to the Discord group is pinned down in the comment section. Again, it's totally free. Once you join the group, okay, you may not have immediate access to the room. I have to let you in. I have to give you the role. I don't have a bot in the room yet. All right, I'm working on that. But if you're not immediately inside the room, just be patient. You will be let in. All right, it's totally free. Again, as I said, totally free. So join the Discord group, guys. So anyway, so the markets here continue to perform well. All right, if you've been watching these videos, okay, subscribe to the channel and give me a thumbs up. If you've been subscribed, if you've been watching these videos, you'll know that we've been working with two Elliott wave counts for the SPY, the Qs, all the indices, but we've been mainly focusing on the SPY since the middle of the week. Two counts, right? One suggests that we are still within a corrective pullback. Count two, or the alternate count, which is now turning into our preferred interpretation, okay, which I'll share with you here, is the bullish count, which is suggesting that we are going to head on higher. We're still in a sort of indecisive road, but little by little, day by day, we're starting to get some clarity. Okay, our first hurdle was to reclaim the 50-day moving average, which we did on all indices except for the Dow. Right, so if you look, we've been analyzing this, right? We've been discussing that the 50-day was a key level to hold. I mean, every single body that trades, right, looks at the 50, the 200. I don't have the 100-day turned on here, but the 50 and the 200, the most common technical and traditional technical indicator that everybody looks for, right? So the market's dipped here ever so slightly, but bounce back, hold support. So since November the lows, or October, the last day of October, we held that 50-day as support and has been carrying us higher, right? It wasn't until, let's see here, September the 2nd, right, that we lost it. We hit a top and now we started trending lower. However, we gapped below the 50-day, which hasn't happened in quite some time, gapping below it, right? I mean, the last time it did was, let's take a look, was here actually back in October. We gapped down, but then we immediately reclaimed it. Okay, so we were looking for a retest of it. So before I dive into the count for both, to the Elliott wave count for both bullish and bearish interpretation, let's take a look at the 50-day simple moving average for the indices. So the SPY is barely breaking above it. Okay, we did not close above the previous high, which was 444.89. We closed today at 443.91, right? Actually, no, my apologies, we closed higher. I'm looking at the high. No, we closed 443.18 on the September 23rd, and we closed 443.91, right? So we did close higher today, which is good. All right, we closed above the 50-day moving average, is at 442.99. All right, so my apologies. It's been a long day, as I said, long week. The Qs are holding above support, which is pretty good also. We officially closed the gap on both the Qs and the SPY. Okay, the gap from September 17th. Okay, so the Qs are bullish at the moment, holding above the 50-day. The SMH well above it, even bull flagging here, ever so slightly. IWM also making good moves. The only one that has not surpassed the 50 is the Dow. Okay, we're still trending below the 50-day. We officially filled the gap, but it looks like potentially if the markets continue to perform well coming into next week, we will see the Dow moving on higher. So back to the SPY, and let's take a look at our interpretation here. Okay, so in this count, we are still suggesting that we have reached the top in the primary degree wave 1, and now we're heading lower in wave A, which completed on September the 20th, and now we're retracing back, correcting this entire decline in the wave B. What does that look like in the 1 hour time frame? So the way we're looking at this, ladies and gentlemen, is that we went down in 1, up in 2, down in 3, up in 4, 50% retracement of the wave 2 and 3. We then gap lower into the wave 5, which came in at 200% extension of wave 3 versus wave 4. It's not out of the question. It's not common that a wave 5 goes that deep, but it's still not out of the question. Now wave A has completed, and now we're looking into the final wave, right? A, B, and now we're looking for the wave C. So wave C will be 1, 2, 3, 4, and 5, right? We want to see, both counts. Actually, let me turn them on side by side so you know. This was 30 minutes. This is 1 hour. So let's go to the 30-minute time frame. So on the bullish count, which is right here on the right hand side, we're suggesting that off the lows, right, we went up in 1, down in 2, held 50% retracement support, 1, 2, 3, and we're still within a corrective wave pullback in the wave 4. All right, now these are the levels that we must maintain in order to discount the bearish interpretation. We must hold above 439.64 or 437.82. Okay, to continue on higher and consider that the markets are going to resume their new all-time highs or the uptrend resumption. Okay, here we want to see, or if you're a bear, right, you want to see the 786 hold as resistance. Okay, we don't want to cross above the 786, because at that point the higher conviction trades will become towards the bullish side. Okay, now given the fact that we are trading sideways here, I label this as a triangle at the moment, right, in a bullish count. So let me go over to the bullish count. So from the lows here on September the 21st, we went up in 1, retraced back in 2, third wave completed on September the 23rd. We're now down in A, B. We're going to potentially do a C, an E, a D, and an E wave, and then we head on we head on higher to complete the 5th wave of the 3rd wave. So our upside targets are the 1618 at 448.91, at which point we're going to look for a retracement. So now why do I have these two invalidation levels here? Because the first invalidation level will be for the smaller degree time frame. Okay, if we go below the smaller degree wave 1 in the wave 4, that invalidates the rule, the Elliott wave guideline, rather, that says that wave 4 cannot go beyond the territory of the wave 1. So if wave 4 were to go lower, then that invalidates this count, and also giving us a little bit less conviction that the wave, that the bullish count is in the works. Now, if this wave 4, let's say for instance this completed here, oops, my apologies, if this completed here and this wave 4 goes below this higher degree wave 1 of the same degree, then that's the same story, right? We cannot go beyond the territory of wave 1. All right, guys. So coming into next week, we want to see a breakout above this resistance line. Okay, we want to see a breakout above 444.68 and 444.89. We want to see the markets hold support. Potentially, Monday we keep on going higher, and that'll confirm it, right? Or maybe we get a smaller pullback, another high, another higher low, and then we go. Okay, but again, just as long as we remain north or 439.64, we should be good to go. Over to the bearish count, just a reminder, just as long as we remain south of 78.6 or 448.42, this count is still at works. Okay, guys. So once this whole, as you can see here, we're holding resistance below the 618, right, which is key. All right, it's key. The 618 is a key level. It's a key fib zone, and it's also resistance for the previous wave 3. So as I mentioned, we still got to be patient. Although at trending waves we took a trade to anticipate that, because we're showing more signs towards the bullish count than towards the bearish count, given the impulsive structure out of the September 20 lows. Okay, now should this fail, I mean, we have our our zones here to keep track of for stop losses. So our invalidations are our stop losses. And so yeah, so we're good to go. We're good to go, guys. So give it a little bit more time. Next week we anticipate more fireworks, and I hope that you all enjoyed this update, this quick update for Friday. Enjoy your weekend. Thank you so much for joining Trending Waves. I hope to see you in there. As always, thank you so much. Subscribe to the channel. Give a like to this video. Click that bell notification so you'll be notified when I upload them. All right. Peace out.